Hey, what's up, guys? This is Mr. Oxy coming at you from West Palm Beach in Florida. By now you're probably thinking to yourself, with just a couple of days to go until the new president is inaugurated in the United States, where exactly should you be investing your Biden bucks? If you've been following my channel, you will know that recently, a few weeks ago, I actually exited my position in Pfizer, and I look for some other places to park the money. I put some of the cash into some small cap energy stocks, especially uranium. But I only invested maybe less than half of the proceeds from the exit from Pfizer. So I figured I will share with you a little bit of news and an update in terms of what I'm looking at and what I've been doing. And we'll take it from there. I'll see you on the other side.
This is what you came for. This is what you came for. I'm over.
All right, guys. So just by way of a little bit of background here, by now, if you've been following my channel, in fact, if you've even made it just this far, you already know that we have a very interactive group of like-minded investors here at Bester Investor. And I like to read all the comments, and I try to reply to most of them if I have the ability to do so. So let me give you a little bit of background in terms of what happened here, and I'll tell you what I actually did. I actually executed this trade today. So I'm going to share it with you right now. So let's take a quick look here. Let me just share my screen with you, and I'll show you what I've been doing. Move myself out of the way a little bit. So the big $1 million question, guys, is energy transfer. Is this going to be my new Oxy? Am I going to be changing my name from Mr. Oxy to ET? So what I want to do is share with you sort of what happened here, why I even made opened a position in energy transfer. I'm going to give you a bit of background. We're going to do a little quick comparison. I'm going to walk you through energy transfer, and then I'm going to leave you to decide what you want to do, and perhaps share your comments with me in terms of what you think, not only about what I did. Was this like my smartest move ever or my most stupid move ever? I don't mind. You can tell me either way. I'm going to chat back and communicate with you. So let's see what's going on. Firstly, by way of a little bit of background. So Bulldogs number one, and I have to assume that Bulldogs number one must be a number one fan of the Bulldogs, but I'm not entirely sure. He said, Rudy, this was 2 days ago, pick up ET this week at $7. They've already cut the dividend 50% back in October. However, the yield is still 8.7%. Now, this is kind of my first, let's call it stick in the sand, right? If I'm going to park money somewhere, I'm not necessarily looking for a stellar return. I'm looking for a relatively safe bet, perhaps a nice little bit of upside. And at the same time, I'm going to be socking away this sweet dividend of 8.7% for as long as they keep paying it to me. And if they stop paying it to me or they cut the dividend, then I might have a rethink in terms of what I'm doing. But cash is a terrible position to be in. So I am always looking for a place where I have excess cash to park that cash. And in this particular instance, my pick, thanks to Bulldogs number one, is energy transfer. So let's do a quick comparison here. I'm not going to spend too much time on this, but I do want to sort of quickly compare the two. So this is Oxy as of today. I'm not sure when I took this slide shot. It is now almost 4 p.m. I probably took this little image at around 3 o'clock, 3:30 or so about an hour ago or whatever. This is Oxy. By now, you're probably very familiar with Oxy. You can kind of see it sitting here in the middle of its 52-week range. And that 52-week range was like $8.52 to $45. It's a $21 billion corporation. I'm not going to dwell on this. By now, if you are still watching my channel or you've been following me, you kind of know where I'm at on Oxy. In fact, the majority of you even call me Mr. Oxy. Around $23, if you had purchased some Oxy when it was trading at $8, $9, $10, $11, $12, you're probably in the money. And that would be a good thing and all strength to you. How about energy transfer? So this particular stock, so this is kind of interesting. It's also sitting here sort of slightly left of center, so a little bit more towards the low end of its range, but a relatively smaller range. If you look at the actual price movement, we looked at Oxy just a minute ago, and it was kind of between 8 and 45. This is only between 4 and 13, and it's currently sitting at about $7. So this, again, the screenshot is about sort of an hour old or so I'm not sure where it is right now. It's also a $20 billion corporation. However, I expect Oxy to leapfrog from 20 billion to a much higher number soon, whereas with Energy Transfer, I don't expect it to necessarily increase very much in terms of market cap. But as I mentioned at the start, this is a dividend yield which is quite juicy at 8.7%, based on its current dividend of 61 cents and the share price of $7. If you're not familiar with how this works, 61 cents as a fraction of $7 is 8.7%. So obviously, as the share price goes up, which I expect it to do, the dividend percentage will move down, even though the 61 cents remains sort of fixed. Anyway, that's a quick snapshot on Energy Transfer. If we look at the actual returns, and in this graph here, I'm showing you a 3-month return for the two equities respectively, we can see that Oxy has given back to us all collectively, good job us, 141% over the last 3 months, whilst ET comparatively has only given back an upside of about 18%. So effectively, there's no contest between the two. Oxy is a kaching in the money stock for the majority of us by now, whereas ET is more the steady eddy kind of plateauing here, sort of flatlining around, hey, not too bad at 20%, but it's got lots of upside anyway in terms of where it's at right now, in addition to that very attractive yield. So what is it that I want to look at, right? So I'm asking the question, what's up with ET, or is it ET go home? For those of you who are old enough to know what I'm talking about, you'll know what ET go home means. Otherwise, you'd have to Google it to find out. I'm going to look at a few things here: valuation, profitability, growth rate, financial strength, and effectiveness, in order to explore ET and to see whether I should make an investment or not. The valuation summary is actually kind of cool because the earnings are not available. The price to sales and price to book ratios are the most appropriate valuation measure. ET seems inexpensive with a price to sales ratio of 0.47 times. That's way below the oil, gas, and consumer fuels industry median price to sales ratio of 1.28. In fact, less than half of that. And its price to book is 1, which is in line with the industry median. But you can certainly see at a glance here, this is a relatively inexpensive stock. Based on its profitability analysis, ET is one of the most profitable companies in the oil and gas consumable industry. Its operating and net margins are above the industry medians. You can see it's running on a gross profit margin here of about 32%, which lags the industry a little. The little gray block here is ET, the little black line is the industry average. And then the operating margin, though, is much higher. It's achieved an operating margin for the trailing 12 months. TTM is trailing 12 months of 7%. The industry was at negative 13. And then you can see the net profit margin for the trailing 12 months is actually positive at 1.5, while the industry as a whole suffered a net negative profit margin over the past trailing 12 months of negative 14.56%. Good job, Energy Transfer. How about the growth rate? So recently, the earnings trend at ET has been weak. Over the past 12 months, the company lost 10 cents per share compared to the prior period's profitable results. However, this was to be expected. If any of you are invested in oil and gas stocks, you will know that that was expected because it was typical of any company in the oil, gas, and consumable fuels industry over the past 12 months. MRQ is most recent quarter, TTM is trailing 12 months. We can see that the earnings per share growth for the most recent quarter for ET is pretty much in line with the industry. We look at the EPS growth, and you can see it's outperformed the industry handsomely. The industry negative 200%, ET negative 100%. That's 2 times better than the industry, even though it looks bad on paper. Revenue growth sort of in line with the industry, but positive, whilst the industry is actually negative. And revenue growth pretty much in line with the industry in terms of where it is today. Pretty much in line, except a nice earnings per share growth for the trailing 12 months. How about the financial strength? This is a critical thing for me because, as you'll know by now, I did a lot of analysis on Oxy's debt, and Wall Street called it the wall of debt because Wall Street likes words with the name wall in it. And Oxy's management has of course, done great work in terms of addressing that so-called wall of debt. Well, how about ET? Its debt to capital ratio at 61%, which, by the way, is similar to Oxy, is within the industry's norm. So it's pretty much the same. However, here's the kicker, right? So the company, so Energy Transfer's operating profit is 3.13 times, so more than 3 times greater than its interest payments. And Energy Transfer would have little difficulty in repaying its debt. What I'd like to see when I look at this particular chart here is not so much the sort of uptick in debt or downturn in debt. Many people have figured out how to make really, really good money using debt or leverage, as they prefer to call it. There's a change in debt for the industry versus ET. It's not really that significant. I'm not too worried about it. What I look for are two things on this particular snapshot here. The first one is the quick ratio. I want to see a quick ratio of 1 or above. So ET is lagging a little bit there, which means it has insufficient or less current assets compared to its current liabilities. I want a ratio of at least 1 to 1, or otherwise I want current assets to exceed current liabilities by greater than 1. So any ratio smaller than 1 year is not very, very cool. However, as I said at the start of this particular slide, ET's interest coverage ratio is more than 3 times, and it will therefore have no difficulty repaying its debt. So it's in a pretty good position, quite strong, regardless of the debt position that it's in, which is one of the ways in which they make money. How about its effectiveness? So here we're looking at the return on equity, return on assets, and return on investments. And you can see sort of at a quick glance that ET is either in line or outperforming the industry. Return on equity is -1%, while the industry is -7%. And return on assets and return on investment are both positive, while the industry is negative. So this one also sort of as a snapshot, good job, Energy Transfer. How about the sort of more street type market in terms of what analysts are saying and what bloggers are saying and people like that? So the first thing I note here is that on TipRanks, which is one of my favorite websites to go to, I highly recommend it. You can see that the analyst rating consensus is a strong buy. You actually have 8 analysts saying buy ET, 1 saying hold. Nobody is saying sell it. You would be nuts if you want to sell this right now. In fact, earlier on when I showed you a quick snapshot of the company, you might have noticed that the short position for Energy Transfer is about 2% or so. Those guys are nuts. I wouldn't short this thing right now. Upside, obviously the shares are trading at around $7. Analyst price targets on average $9.38, the high about 11, average 9.38, as I just said, and a low of 7, which is where it's at right now. So this target gives you about a 35% upside, which would be really, really cool and neat to earn in addition to the nice, fat, juicy dividend. And very quickly, just to wrap this up, this is TipRanks. Right now, it's rated 10 out of 10 for a stock that will outperform. By the way, if you actually go into TipRanks and you look at Occidental, you'll see Occidental is kind of lagging here on the sort of pink section of this particular graph. So I'm not saying that they are always correct, because Oxy has been very kind to us over the past few months and made us a lot of money, as I said, ka-ching. But anyway, for what it's worth, the analysts are rating Energy Transfer as a buy and outperform 10 out of 10. Analysts strong buy. Even the blogger opinions are bullish. The hedge fund activity has increased a little bit. That's always a positive trend. There's not a lot of insider activity going on right now. TipRanks investors the sentiment is negative, but if you look at the number, it's 0.03. The new sentiment is neutral, 50% bullish and bearish. The technicals are positive. The momentum is negative. Obviously, we know that because it includes the past 12 months, or the TTM, trailing 12 months. And the fundamentals include the numbers I shared with you a minute ago, return on equity of -1.39 and an asset growth of 3.64. So guys, that's a wrap on Energy Transfer. Thanks once again to Bulldogs #1 for recommending Energy Transfer to me. I actually opened a position today with several thousand shares of Energy Transfer at about $7. So you can follow me and track me as I go, because I'm telling you exactly what it is that I did. And you'll be able to sort of catch up with me from time to time as I make videos, which will include companies like Occidental and Energy Transfer, because Energy Transfer is now one of my top 5 energy holdings. I have Occidental, Enbridge, Pembina, Energy Transfer, and Total. Those are my big 5 in terms of my energy portfolio. And then I have a whole slew of smaller ones that include the small cap energy and uranium stocks that I mentioned briefly at the introduction to this video. Guys, if you have not hit the subscribe button yet and you're still here, please do so. I would appreciate it if you subscribe, because I do this homework so that you don't have to. Tell me what you think. Let me know in the comments. And obviously, as you know by now, I will respond and chat with you, and we'll share some thoughts and decide what it is that we can do in order to build some generational wealth. Thank you for watching. Stay safe, take care, and I'll see you soon. Bye-bye.